Have you ever heard money advice that just sounds off? You might be following popular tips that seem smart, but they could actually hurt your financial future. In this video, we'll reveal 8 of the worst money tips people still believe and explain why ignoring them can save you big time. Are you ready to stop taking bad advice and start making smarter financial choices? Let's dive in and expose the truth. Number 1. All credit is bad. A lot of people say credit is dangerous, and they avoid it like the plague. But here's the thing. Credit itself isn't bad. How you use it can be. Credit, when used responsibly, can actually be a tool to improve your financial health. Building a good credit score can open doors to better interest rates, mortgage approvals, and even lower insurance premiums. Your credit score is like a financial report card, and keeping it in good shape helps you access better deals and save money in the long run. However, not all credit is good. It's crucial to avoid unnecessary loans and high-interest debt. Using credit for things you can't afford or don't really need can quickly spiral into financial trouble. The key here is to only use credit if you can afford to pay it off and always keep track of your payments. In the right hands, credit is a tool, not a trap. Number 2, buy on credit if you can't afford it. Many people believe that if you can't afford something right now, it's okay to buy it on credit. While this may seem like a convenient solution, it can quickly lead to financial trouble. When you buy on credit, you're not just borrowing the price of the item. You're also agreeing to pay interest on it. Over time, the interest can significantly increase the overall cost, making it much more expensive than the original price. Moreover, credit can create a false sense of affordability. You might feel like you can buy things you don't need, which only adds to your debt. Before you know it, you're stuck paying off purchases long after the excitement of owning them has faded. Instead of buying on credit, consider saving for big purchases or only using credit when you're confident you can pay off the balance in full each month. This way, you avoid the trap of debt and stay in control of your finances. Number 3, loyalty to one provider pays off. It's easy to stick with the same provider for years, whether it's for insurance, internet, or utilities. Many people think loyalty will eventually lead to better deals or rewards, but this is rarely the case. In fact, staying with one company can cost you more in the long run. Over time, companies may raise your rates, knowing you'll likely stick around out of convenience. Switching providers or shopping around for better deals can often save you hundreds of dollars a year. Many companies offer better prices to new customers to attract them, while long-term customers get hit with rate hikes. Before your contract is up, always compare other options. Sometimes you can even use a competitor's offer to negotiate a better deal with your current provider. In the end, loyalty may feel safe, but when it comes to your money, exploring your options is a smarter move. Number 4, the best place for your money is the bank. A common piece of financial advice is to keep your money in the bank, but this might not be the best option if you're looking to grow your wealth. Traditional savings accounts offer very low interest rates, often less than 1%. This means that even if you diligently save, the interest you earn may not keep up with inflation, slowly eroding the value of your savings over time. Banks are safe, but they aren't the most effective way to build wealth. Instead of just parking your money in a savings account, consider exploring other options like investing in stocks, bonds, or mutual funds. These alternatives come with some risks, but they also offer the potential for much higher returns. Of course, it's still wise to keep some money in a bank for emergencies and daily expenses. But if you want your money to grow and work for you, relying solely on a bank isn't the answer. Number 5, you don't need a budget. A lot of people think they don't need a budget, but this is one of the most harmful money myths. Without a budget, it's easy to lose track of where your money goes, leading to overspending and missed savings opportunities. A budget isn't about restricting your spending. It's about gaining control over it. By setting a clear plan for your income and expenses, you'll know exactly how much you can spend, save, and invest each month. This not only helps you avoid debt, but also allows you to reach your financial goals faster. Without a budget, you're essentially guessing and hoping that everything works out. Creating a budget doesn't have to be complicated. You can use simple tools or apps to track your spending and plan ahead. The bottom line, having a budget is one of the easiest ways to manage your money wisely and achieve long terms. Financial success. Number 6. Insurance is a waste of money. Insurance may feel like an unnecessary expense until you need it. Whether it's health insurance, home insurance, or car insurance, having coverage can save you from financial disaster in the event of an emergency. Skipping insurance might save you some money in the short term, but it can lead to massive costs if something unexpected happens. If you're worried about paying for insurance, consider setting aside a small amount each month in an emergency fund. But be aware that this may not cover the full cost of major incidents like hospital bills or car accidents. It's always wise to shop around for insurance policies that offer the best balance of coverage and affordability. Protecting yourself with insurance isn't a waste, it's smart money management. Number 7. If you hate your job, just quit. We've all had bad days at work, but the advice to quit your job without a backup plan is a risky move. While the idea of leaving a stressful or boring job is tempting, quitting without having another source of income lined up can lead to financial strain. Instead, focus on improving your situation while keeping your income steady. If you're unhappy at work, try looking for ways to make changes, whether that's asking for a raise, exploring a new role, or developing new skills that can help you land a better job. Sometimes investing in education or personal development can be the key to transitioning into a more fulfilling career without sacrificing your financial stability. Number 8. You can handle everything without help. There's a popular belief that managing your finances is something you should do entirely on your own. While it's empowering to take control of your money, sometimes the best move is to seek advice from a professional. Financial advisors, wealth managers, or even tax consultants can provide valuable insights that save you time and money in the long run. As your financial situation becomes more complex, having an expert in your corner can help you navigate tricky areas like investing, retirement planning, or tax strategies. Don't be afraid to reach out for help when you need it. Sometimes, a little guidance can make all the difference in achieving your financial goals. So, there you have it. 8 popular money tips that might sound good at first, but can actually harm your financial future. Remember, not all advice is created equal. Take the time to evaluate what's best for your unique situation, and always make informed decisions when it comes to your money. What's the worst financial advice you've ever received? Let us know in the comments below. If you enjoyed this video, don't forget to give it a thumbs up, share it with your friends, and hit that subscribe button for more practical financial tips. Thanks for watching, and we'll see you in the next one.